All right, on Capitol Hill, the House Ways and Means Committee finished marking their version of the tax cut bill as Republicans forge ahead on their effort to overhaul the U.S. tax code. The changes include keeping the adoption tax credit, and these final markings do not include a repeal of the Obamacare mandate. On the Senate side, Republicans are unveiling their own version of the tax cut plan, but there's more than a few differences between these two bills. Now, with all the changes happening on Capitol Hill, I want to take a look into the tax rates and deductions that lawmakers are reviewing. To start, the state and local tax deductions, known as SALT. This is causing a lot of debate. According to the Governor's Finance Officers Association, around 30% of taxpayers directly use this deduction, particularly suburbs in states like New York, New Jersey, Pennsylvania. They'd be hurt by the removal of this tax break. This is what the Senate does. You'll notice that the House one limits some of the deductions to $10,000 in property taxes. Secondly, medical expenses. Most people who benefit from this deduction make less than $100,000 and are older than 65. So not great for the middle class or the elderly if you lose the ability to deduct medical expenses. Third, the estate tax. This is the tax you pay on inheritance. You only have to pay the estate tax on that portion of what you inherit that is greater than $5.5 million if you're inheriting it from one parent, $10.1 million if you're inheriting it from two parents. There are different things that they want to do with this in the House and the Senate bill, but the only thing you have to know about this is that anybody who tells you this benefits the middle class, it absolutely doesn't. Trump may be a fan of getting rid of the estate tax, by the way, because his family stands to benefit in a huge way. Depending on how much you think Donald Trump is worth, it could be $500 million to $1 billion. Okay, here's the fourth one. The corporate tax rate. The Trump GOP plan would be to drop the corporate tax rate from the 35% statutory rate that it's at now to 20%. Here's the trick. 35% is not the average of what most companies pay. The effective rate, which is what the average of companies pay, is about 18.6%. So if you don't get rid of a lot of deductions, if 35 becomes 18.6, how low does 20 become? To talk about this, I want to bring in Republican Congressman Rodney Davis of Illinois. Congressman Davis, good to have you here. Thank you for being with us.
Thanks for having me on, Allie.
What do you make of this? There are two different things going on in these two different bills. Paul Ryan today said, and he's not wrong, this is the way it's supposed to work. The House passes a bill, the Senate passes a bill, it goes to conference, they try and come up with a compromise. Which bill are you in favor of?
Well, I'm, of course, in favor of the House bill. It's a bill that I'm going to get to cast a vote on. It doesn't mean that the bill that it was introduced earlier this week and marked up this week in the Ways and Means Committee still isn't subject to changes. But the goal is, let's get it across the floor. And just like the Saturday morning cartoon showed us years ago, if we pass a bill, the Senate passes a bill, then we'll work out our differences and get one to the president's desk that's really going to be great for the middle class and lower income families in this country.
I don't know if great's the thing, right? What'd you guys come up with? A number of an average of $1,182, but massive corporate tax cuts, massive cuts to the estate tax and AMT. So if you're wealthy, it's great. If you're middle class, it's okay.
I disagree wholeheartedly, Allie. As a matter of fact, I think if you ask many families that are living paycheck to paycheck in my district in central Illinois, $1,200 is a big deal. That's a massive break to be able to allow them to do the things that they need to do for their families. And we believe that by reducing the amount of deductions and loopholes that many of us are always criticized for every time we run a campaign, this is the opportunity for us to be competitive in the global scale and also make sure we put more money in the pockets of families right in the middle class.
All right, let me talk to you about trickle-down economics. Both Treasury Secretary Steve Mnuchin and the President's advisor Gary Cohn made comments today. Let's play them and talk about it on the other side.
Do you still believe in trickle-down economics?
I do.
We see the whole trickle down through the economy, and that's good for the economy.
We've had years of learning that this isn't really true, and then recently in Kansas we've tried this concept, and it doesn't really work. And I talk to Art Laffer about it all the time. Do you really believe trickle-down economics works anymore?
Well, what I believe is that we can actually continue to make economic growth even more sustainable than what we've seen just recently in the last few months by making our tax code fairer, flatter, and simpler. Look, the middle class in this country need to put more money back into their pockets instead of sending it to Washington, D.C. And we close a lot of these loopholes that incentivize jobs going overseas.
Let's just answer the question. Let's not talk about this. We know that the middle class is going to get $1,200
I don't
out of
believe our
this thing.
tax.
Tell me why corporations need a big tax cut.
I think many of my constituents will get more.
Okay.
Well, I think we need to make our business environment more competitive on the global scale. We're at a much higher tax rate. As a matter of fact, if you look at some of my Democratic colleagues who have hauled companies in before Senate hearings just a few years ago to talk about companies wanting to use the tax code to invert where they're going to be based, we're closing those loopholes. This is why we should have bipartisan support. Many of the things that we get rid of are some of the things that the Democrats in the House and the Senate have been clamoring for to get rid of for years. But now they want to protect them.
So I will say this to you. We've seen it under the Reagan administration. We've seen it in the UK recently. When you lower tax rates on corporations, you don't see any corresponding wage increase in the United States. That's the bottom line. There's just no evidence that that actually happens. So I'll tell you what happens. If you're a company or you're wealthy in America and you lose the estate tax and you lose the AMT and you get the corporate tax rate reduced from 35 to 20, those are absolute gains. There's no question that's going to happen if one of these bills passes. But if you're middle class, you know you'll get an average $1,200 gain, and everything else is a hope. You hope economic growth will hit 3%. You hope the companies will take the savings that they have in taxes and somehow build factories that'll employ more people and not outsource. So you know what I'm saying? Like, if you're middle class in America, this is on a wish and a prayer. If you're rich, this is a gift.
I don't think so. As a matter of fact, you and I must have a distinct disagreement on what the American economy and small businesses throughout this country are going to do when we put more money into their pockets and allow them to invest more money in their businesses. They're going to buy more equipment that's manufactured in small towns throughout America.
Congressman, there's no shortage of capital in this country for businesses. Interest rates are as low as they've ever been. Money is everywhere to be had. Companies are not expanding, not because there's a shortage of capital or money or tax rates are too high. You know why companies expand? When there's demand. I just don't know where you're going to think that this all of a sudden demand is going to pop up when you don't give the people the break, you give the companies the break. Companies have a lot of money.
We believe you look at the individual tax bracket changes that we've put forth, and we are focusing completely on the middle income and lower income families. They're going to be able to ensure that their taxable income continues to go down. And that means also a fairer, flatter, simpler tax code that's going to allow them to put more money in their pockets and participate in their local economies, help their Main Street businesses. And I do believe that companies in our Main Streets are going to continue to invest and grow in our communities to be able to help create the jobs that we know are going to be a part of this tax reform package once it passes.
I'm going to put it on the screen. You won't be able to see it, but I'll tell you what it is. This is the Reagan tax cuts when corporate tax rates went from 46% to 34%. Wages fell for 5 straight years by as much as $3,000 adjusted for inflation. I mean, there's just no evidence that the tax cuts result in higher wages. I'd be happy to study anything you give me that tells me otherwise. I feel like you're working off of talking points, sir.
Well, I appreciate that comment, but I will look at the bill that we've produced. We think we've put together a much fairer, flatter, simpler tax code that's going to help on the individual side, really ensure that we are globally competitive with our competitors across the globe. And this isn't just China and India. These are countries like Canada and Ireland.
I hear you, sir. But I'm asking specific questions, Congressman. You know that, right?
Are going to do it.
I ask you a specific question, you say fairer, flatter, fair. I ask you another specific question, you say fairer, flatter, fair, or whatever you're saying. Like, I don't know what it means. I just don't know what it means. I'm giving you specific points of evidence on every point you make, and you come back and say fairer, flatter, whatever. What are you saying? Fairer, what is it?
Fair, flatter, and simpler, which I think is what the American people demand of us. So you want me to address the Reagan tax cuts?
You can address anything you want. You can address Reagan tax cuts. You can do UK tax cuts. You can address why trickle-down economics didn't work in Kansas. I've given you so many things to specifically answer, and you keep on saying fairer, flatter, simpler. I mean, I don't know where do I take this discussion with you? I don't know what to do anymore.
Well, and when we talk about the Reagan tax cuts, I can tell you that's another reason why we've got to address this 70,000-page tax code. I was 16 when the last tax reform package passed. I had a lot longer hair and a bad mustache and was driving around the square in my hometown. We've got to do something to address a tax code that incentivizes companies to invest overseas. And that's exactly what we're doing here. You can call it trickle-down economics. I call it tax reality.
Well,
and that's exactly
the Treasury Secretary of the United
reform.
States called it trickle-down economics this morning. I'm not making this up. He said it at the Economic Club of New York. That's what I'm saying. I guess that's where the disconnect is. I hear what you're saying, sir, and I get what what you want to do. That's not what the administration seems to be going for. They think that trickle-down economics is going to be the answer. I know you got to go, and I appreciate you taking time to talk to me, Congressman, so we'll continue this another time.
Thank you.
Congressman Rodney Davis from the 13th District in Illinois.